Alright guys, I'm back and it's a very interesting time to be on the market, as already mentioned in the couple last videos. And today we're here to talk about the interest rate in UK, United Kingdom, right? Yesterday we had 9 p.m. on Sydney time, Australia time, BOE coming in and hiking 25 basis points, so 0.25% in the interest rate. And it was very interesting, right? Because always when the bank raises a rate, it should take as positive for the currency. So it should take as positive for the pound, for the GBP, all right? Especially against weaker currencies. GBP, NZD. NZD is one of the weakest currencies right now. JPY, let's say, as well. But interesting enough, it was sort of not positive and it was very negative. Soon as they hit the news, the GBPUSD, let's say, was one of the worst performance for that time, for the 5 minutes, right? If we look at the charts, you put in 1 hour or any time frame. Now, yes, the market is pricing up and going up, but on the release of the news, it was very negative. All right, so this is why I'm here to discuss with you guys. As you already know, my name is Lucas Sanchez. I'm the technical market analyst here at ACY Securities. Please give us a like, share this video if you have any economic friends, or if you have any fundamental trader, or even if you have any trades that are friends of friends, and there you go. And comment as well if you have any questions. I would be lovely to answer those questions. All right, for you that follow us on our website as well, if you don't know, we post daily content, all right? Me and the other analysts as well on the acy.com website, on the tab of learn, so education, learn, and then you're gonna have access to those sort of reports every day, okay? And here I have a very interesting, this is from BOE, so Bank of England, all right, so it's easy to get access to it. Just type Bank of England monetary policy, the first link, it's going to be there. This is public, and they state three main titles here, right? So the first one is inflation is falling, but it's still too high. So they recognize that the inflation is too high, but in the other end, yes, inflation is falling, but they predict that inflation will be at 5%, all right, by the end of 2023. This is a very optimistic inflation outlook, I would say. Why is that? Well, all the energy prices are rising on UK, all the fuel prices, all the food prices are rising on UK. So if they are thinking, you know, inflation right now is 7% at UK, 7 point something percent at UK. So if they're thinking that 2% will fall in the next couple months, right? So in the next 4 months, that's very optimistic. And this is dovish, this is bearish for the pound. Why is that? Because if inflation is falling, then the interest rate rises are working to the society and are cutting spendings into the society. So basically the societies are not spending anymore and they are saving it. Once they start to saving money and not spending money anymore, then you have it, the interest rates is starting to work. And another thing is, the full effect is yet to be felt, all right? So it won't be feeling now, it will be feeling the next couple months, couple quarters, all right? So yes, they recognize that inflation is too high, but they say that inflation is been declining, it's been falling the couple months ago, all right, the past couple months. And they say, looking ahead, the Bank of England anticipate inflation to gradually decrease to around 5% this year and ultimately reach the target 2% rate by early 2025. All right, so we have 1.5 years more to go for the inflation comes back now to normal. Well, folks, to be honest, inflation was at 11% So right now, it's not that bad, all right? All right, next one. They say as well that they've raised interest rates to make sure inflation keeps on falling and it stays low, okay? So the Monetary Policy Committee raised 25 basis point, as just mentioned for you guys, on the 3rd of August of 2023 at 9 o'clock at Sydney time. And the rates are now 5.25%. And they are looking to be a data-dependent approach from now. Well, if you follow us on YouTube, you've maybe, remember that I've been here a couple weeks ago, maybe 2 weeks ago or 1 week ago, telling you all that basically all the other central banks have been doing the exactly same thing as the Fed, right? So the Federal Reserve is data dependent the past two meetings that they had. Now, we had last week the Bank of England coming and saying the exactly same thing, that they will be data dependent, okay? The European Central Bank, not the Bank of England, last week. And we had this week as well, yesterday, the Bank of England saying the exactly same thing. So everyone is following the Fed, right? So everyone is exactly doing what the Fed is doing. What Jerome Powell is saying, Yellen is saying, and Lagarde is saying, everyone is saying the same thing, okay? So yes, we can anticipate a data-dependent approach. And if they are right, and if inflation comes down to 2%, right, you guys can see the chart here, then we are not worried anymore about raising rates. And for those who thinks that the BOE will raise 50 base points, sorry, it won't happen. It won't happen, all right? It won't happen. There's no data to this mystically thing happen, all right? And the last thing that they say is that the BOE, expecting inflation to fall markedly further this year and met their 2% target by early 2025, as I just touched on it. And they have a forecast, right? So as you guys can see now on the screen, this is the forecast. You can see from 2004 all the way to 2020, we had a very, very steady, didn't go above 5%, so it was between 0 and 4%, 4.5%. But now, as you can see, the forecast from now to 2024, beginning of 2025, second quarter, we can see that there is they have a huge decline on the inflation, right? As you can see on the chart. So, guys, coming back here now, I'm still very bearish on the pound, especially against the dollar. All right, so I still see further decline on GBPUSD, and this is the reason why, because basically one of the hawkishest bank that was there, that was the BOE, is not hawkish anymore. It's turning data dependent. Is this dovish? No, it's not dovish. They even outlined that further monetary policy tightening will be necessary if data dependent ally. All right. So now you know what's happening on UK. And yes, I'm expecting further decline on GBPUSD. Okay. All right, guys. So again, like this video, subscribe to the channel, put the bell, so then every time we post something, you will be able to get the fresh content. All right. And share this video with your friends. All right. See you next video, guys. Bye-bye.